Hey guys, I hope you're having a great trading day. Right now the markets are open. I am up $64 for a 0.55% increase. Right now, let's go look at our cryptocurrencies. Actually, one thing I want to do is talk about how my portfolio has been doing for this past year. Down $474, down 3%, almost 4%. Down on the portfolio, but I'm really not too concerned with that, especially with my new approach by holding these high dividend ETFs. For the all time, I am down $61. So the portfolio is starting to recover a little bit. I'm just hanging on to my stocks. I'm just looking around, seeing what other ETFs I can put into the portfolio, something that really won't overlap with the current ETFs that I have. Let's take a look at Bitcoin. Right now, Bitcoin is sitting at $3,996, down $25 for the day. I'm just waiting for Bitcoin to really just spike down to about $3,000, and then I'll probably put about maybe $200 into Bitcoin, maybe $100 into Bitcoin. For the past week, Bitcoin has been doing really, really well, up $152. You can just take a look at the graph here. There's a tremendous spike up around January 6th, I believe. Yeah, January 6th, there's a tremendous spike up around January 6th when Bitcoin reached its new level, about $4,000. It's really just been trending around that $4,000 mark. So, I'm guessing that Bitcoin is seeing some high resistance around this $4,000 level, and we are seeing the support around 3,100. So let's take a look at my high dividend ETFs. The Vanguard Total Stock Market ETF, $132. Currently, I have 50 shares for equity of $6,000, $6,600. Average cost $121.67. My total return is up $500. So not too bad. I'm just holding it out. I love this ETF. I explained it in the last video how much I love this ETF. It pretty much covers the entire market as a whole. And I know it's this ETF that people like, and it wasn't the other ETF. I'm just going to quickly show what the other ETF that I was talking about in the previous video. The Vanguard S&P 500 ETF. I know this is another popular Vanguard index fund that people like to hold. Quite expensive at this current time, though. $237. Really just tracks. It mirrors the S&P 500. Not really much to say. This is really just, put your money in and, check back in like 15 years. But the reason why, again, I went with ticker symbol VTI is because it's just more diversified. It holds the smaller and medium cap stocks that I like. And I think this VTI also tracks about 80% of the S&P 500. So this ETF is quite cheaper, and they do pay a pretty significant dividend. It's not terrible or anything, but yeah, very exciting there. Vexus Total International Stock Market ETF. 50 shares again for a total return of $155 for 6% increase. It really just holds a lot of just emerging markets, Europe markets, China, all the international stocks that I want to be diversified into outside the U.S. This ETF really just plays a part of that. VEX is a really good ETF. I think the expense ratio for this ETF is a little bit higher than VOO and VTI. I think the expense ratio for VEXUS is around 0.11. So again, what does that mean? That means that for every $10,000 that you put into this ETF, they take out $11 for the year. So this is the reason why you want to get into the sort of the lower expense ratio ETF, so you don't end up paying a lot of money towards the end of the year just to hold the ETF. And the last ETF in my portfolio is the PowerShares S&P 500 High Dividend ETF. It's currently sitting at $39. One of my favorite ETFs because this generates a passive income, a monthly dividend income that I can just keep putting back into my bank account. And that's really the goal here. The goal is to just to make as many passive incomes as possible. Right now I have I would say about 4 passive incomes just off dividends alone, because I'm making M1 Finance pies. I made another pie graph today with high dividend paying stocks. There's a little bit more growth into this this pie chart. You guys, I'll make a video of it later on. But you guys see SPHD here, 70 shares. I added 5 shares to SPHD. I think right now, I wouldn't say I would buy. I think this ETF is a good buy around $38, 38.50 or $38 would be a good buy for this ETF right now. I think the chance is gone to buy this ETF, especially when the ETF. Let's take a just look at the graph here from December all the way down. We can see that there's quite a lot of volatility into this ETF, even though this is supposed to be a low volatility ETF. There's been a significant drop in the price when it reached all the way down to $36.52. I really thought that was a good buy for the this kind of ETF. But yeah, even though it's supposed to be, it tracks the lowest volatile stocks on the S&P 500. We're seeing quite a bit of volatility into the stock. So these ETFs, really good holders if you just hold out long. I think this ETF has an expense ratio of 0.30. So again, for every $10,000 that I put into this ETF, I will be paying about $30 per year as long as I put $10,000 in it, and that is actually quite high for an ETF like this. But again, if we consider that this ETF is quite it's a decent grower. If you invest from 2014, you would be up almost 68%, and you're generating a monthly dividend income with all the dividends reinvested. You would be up quite a bit amount of money with this ETF. So it's one of my favorite ETFs. It's certainly low volatility. It really just the significant volatility of the markets with the trade war and everything else that was going on last month really impacted just everything, and everything just bottomed out and hit the floor. So that's going to do it, guys. There's nothing really. I really shortened my Robinhood portfolio. I made things simple for me to just quickly glance at. I am watching Bitcoin again. I am waiting for Bitcoin to get down to about $3,000, and then I'll probably put about $200 to $100 into Bitcoin. I am focusing on the M1 Finance account and generating passive income by creating multiple portfolios. I think right now I created another portfolio, and I have renamed the portfolios like Dividend Portfolio A, and then I made another one which was Dividend Portfolio B, and I'm planning on making another one with that would be Dividend Portfolio C, and this one might be just filled with like all monthly dividend income stocks or high dividend income stocks where I can generate even more passive income. So there may not be much point to trying to create passive income without having a significant amount of money set aside so you can really compound invest. But over time you will see you will start to see more and more money being generated. And that could be used to pay off your cell phone. It could be used to pay off your car. It can, well, not your car, but maybe like, something that's wrong with your car or something like that. You can get like an oil change or some gas or anything else like that. Just simple things of that matter. But that's going to do it, guys. Right now, the portfolio is headed to $12,000. For the week, I am up 5%, so really good. I'm enjoying the new strategies that I am putting into work, and that'll be it. So again, guys, head into $12,000, and I'll see you next time.